Hi there, Jason Laux here. I'm the founder and creator of the 7-Day Sales System, the Foreclosure Profit Machine, the Private Money Machine. I'm the founder of ForeclosureInvestingSystem.com, SecretLender.com, the CEO of Home Financing Options, and the host of The Real Deal Show on Clear Channel Radio. I've been investing in real estate for almost 2 decades, 16 and a half years now, and I have truly made a ton of money and built an incredible lifestyle doing it. But I've also helped thousands of sellers, thousands of buyers, and I've also helped thousands of people get started in real estate for themselves. I've also helped lots and lots of people who were already experienced take their investing and income to a higher level. And I can tell you without a doubt, the number one thing holding most people back is funding for their deals. So in the next few minutes here, I'm going to show you the right kind of financing for real estate investing. When most people get started in real estate investing, they think they want to go down to the bank and borrow money at nice low bank interest rates. But here's the truth about bank financing. Bank financing is not for investors for a number of reasons. One reason, and a big one, is banks have lots of rules. They require good credit, down payment to match, big down payments, usually for investors 20% or more. They will only lend you 1 or 2 mortgages at the most before they'll cut you off. Banks do not lend on vacant houses. They won't lend on a house with nobody in it. They know it's a liability issue. They require all kinds of paperwork from you, tax returns. They move very slow and takes them a long time to lend. Banks won't lend on rehab houses. They won't lend on houses that need substantial work. If the house is not already up to code, if it won't pass inspection as is right now, they won't lend against it. They won't lend you repair money. They won't lend you enough to buy the house and fix it. They won't even lend you all the money you need to buy it, much less extra to get it fixed. They only lend low LTVs, that's loan to value. They'll usually only lend you 70 to 80% of the money you need to buy the house. And not only that, they lend against purchase price, not value. That means if you need all the money you need to buy the house and all the money you need to fix it, bank financing is not for you because they lend against the purchase price. So the lower price you negotiate with the seller, the less the bank will lend you. It means they'll lend more on crappy deals than on good ones. In fact, if you paid full price for the property, they'd lend you more than if you negotiate a great deal. Think about that for a second. Now realize they're doing that with your money. Okay, they're lending out that money and they'll lend more to people who don't know what they're doing and pay too much than they will lend to investors like you and me who get great deals. And so they'll only lend against how much you're paying for the property, not how much it's actually worth. So for example, if a $100,000 property, if you're buying it for $50,000, they'll only lend you 80% of $50,000 or $40,000. But if you were dumb enough to pay full price, they'd lend you 80% of the full $100,000 or $80,000. They'd lend you twice as much if you were a terrible investor. That does not make sense to me. You have to have good credit. You need a down payment to match that good credit, all just to be able to get those nice low interest rates, right? Well, it is a low interest rate, but there are lots of hidden expenses. There are points, origination fees, funding fees, and prepayment penalties that end up where it'll actually cost you more to use that money than if you just ended up paying a higher interest rate. And not only are you paying all those points and fees and everything else, they come out of pocket. Points are paid up front. And remember, they won't lend you enough to put those points into the loan, not if you're an investor, which means you're having to take that money out of your pocket. The other ways we finance deals, it just comes out of profits at the end. You never feel the pinch, and it makes you able to do a lot more deals. The bottom line, bank financing is not for investors. So what to do? The answer is private lenders. They are easy to work with. They don't have points and fees and all that other stuff. They don't care much about you or your credit and what down payment you have. They don't care about you. They just care that the property has enough additional value, that equity, to cover their investment. And they'll loan against that value, not your purchase price. They'll loan against the after repaired value of the property, not your purchase price, which means when you find a good deal, they'll finance you 100% plus of what you need to do the deal. They'll loan you all the money you need to buy it, and they'll loan you the repair money, And if it's a great deal like I recommend and I'm going to teach you how to find, they'll even lend you enough for you to get cash back at closing on your deals. And all of that with no monthly payments. All of this comes from the right kind of private lenders. Most people don't realize this, but there are 3 kinds of private lenders. If you're not very experienced, you may not know this. I know if you walk down to the grocery store today and ask 100 people what's your favorite way to finance real estate properties, not 1 in 100 will even know what a private lender is, and maybe 1 in 10 of those people would even realize that there's 3 different kinds of private lenders. So in a coming up video, I'm going to show you the 3 kinds of private lenders, and I'm also going to show you how to figure out which one is right for you. So watch out for that next video coming up soon.